Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman, and today I'm joined by Paul Wiseman, president of Guildhall Wealth Management. Should be a great show because, Paul, gold is up this week, all-time high. No mainstream news isn't really talking about it.
Why would they?
I know. I noticed even the stocks started to move just before gold really started to make a move. So right now, gold is up 24% this year in US dollars. It's up 27% Canadian. Silver has also broken $30 this week. As we tape the show on Friday, we're up 26% in US dollars and up 29% in Canadian dollars. And as we can see, Mike Maloney actually put out on X that the USD is at an all-time low against real money, which is gold. So what do you make of this? Are we finally seeing gold reclaim its rightful place as real money, or do we have a ways to go?
I think we've got a long way to go. Excuse me. I think gold is undervalued. I think silver is tremendously undervalued. We've seen so much moves up in the last 2 weeks. I mean, silver dropped virtually. It was 30.15 spot, and it dropped down to like 27 and change. I mean, that's a 10% move. It wasn't the physical.
Yeah.
People weren't selling physical gold and silver. They were selling paper because the stock market was all over the place.
Do you think part of that pullback was because something like this was about to happen?
Well, the excuse was the debate, which is meaningless. I mean, that doesn't really move gold and silver, but it makes good headlines.
Well, that actually was a great segue, because one of the things that the debate didn't talk about was really the economy. And now I'm going to just kind of move into the Canadian economy, but the Bank of Canada, a Bloomberg article just came out that CIBC is predicting I have to put this in quotations, a jumbo rate cut by December. Also, National Bank expecting the same thing, 50 basis point cut by the end of the year. And this is based on, number one,
50
jumbo is a 50 basis point. And this is because they're saying that they want to claim that they've won the war on inflation. But more importantly, what it really is about is that unemployment has jumped to 6.6% in August, despite 22,000 jobs being added. Of course, it's because they lost thousands of full-time jobs, gained part-time jobs, and then we saw that McDonald's had a job fair, and it was attracting hundreds and hundreds of people. So some are saying that the unemployment rate could hit as much as 10%. So do you think that, talk to us about interest rate cuts, and does it signal trouble for the economy? Do you believe that cutting rates will not increase inflation? Because I think it would create inflation.
Well, 0.25% is not going to make any difference. I mean, if the average person that has a credit card debt, for example, I don't know what they charge the juice. Is it 22%, 24%?
It's probably still above 20.
Yeah, is 0.25% or even 0.5%, what's that going to be, like $15 on someone's bill? They're only robbing Peter to pay Paul anyway. They've got 22 credit cards. They're jumbling around.
Yeah. A lot of personal bankruptcies, a lot of business bankruptcies.
There's a lot of defaults. I mean, you can't shop at Amazon if you don't have a credit card. Mm-hmm. You can't shop at Costco if you don't have a credit card. So where do people shop? I actually yesterday, I'm talking about inflation, and I always say we don't grow, pineapples and watermelons and, most fruits that come from
avocados.
Yeah, they come from the U.S., they come from Mexico, they come from Chile. They got to come across the border. I actually yesterday went to Waterloo with my granddaughter to the university there, and we got held up coming back. They were repaving the road, and there was so many trucks coming from Detroit, coming from east to west. I mean, I said to my granddaughter, I can't believe the amount of trucks. Every single vehicle was a truck. There wasn't that many cars.
Coming in from the States.
So we're still importing. We're not exporting. We're importing product. Well, so if we're importing, for example, fruits and vegetables and clothing and whatever else we need, the essentials of life really coming across the border, the U.S. dollar is been so strong against the Canadian dollar. Years ago, when the US dollar or the Canadian dollar was weak, they went in and they bought up the Canadian dollar. That's because at one time we were on par. And in actual fact, we were better than the US dollar. But we don't do that anymore. We just let it slide because Trudeau says, well, it's good for exports. If our dollar, is
well,
better against the dollar.
I mean, speaking of Trudeau, even CBC came out against him recently because they were talking about that the economy is deteriorating fast. Our GDP is getting worse and worse all the time against G7 nations. And they had Trevor Tombe, who was an economist from University of Calgary. He was saying, what I said last week on the show actually is that our productivity is where it was 10 years ago. I mean, by any other rights, that would be a depression. Yet Trudeau is claiming that the economy is booming. We've got 1 in 4 people working for the government in some capacity. I mean, where do you get the money for that if you're not producing goods? We're getting conflicting messages. How can the economy be booming when unemployment is rising and people are struggling? And how does gold and silver play into that?
Well, gold and silver has always been real money, and this is the Real Money Show. It's been money for thousands of years. You can't print gold and silver. You can't digitally press a key and say, there's $1 trillion. You have to dig gold up out of the ground. You have to dig deeper for silver today. The uses of silver are going up. There's a shortage of product, yet they say that there's not. They keep the price down. And I say they keep the price down. Somebody's got the finger on the button and doesn't want the price of silver to go up.
And yet
gold has started to take off because they can't control gold like they can control silver. Silver's a little
some
smaller
say
market.
all sustaining costs for silver is in the mid-20s now. So how are you going to push the price down further?
Well, I mean, you look at what missiles, the amount of silver in a missile that's non-recoverable.
Right.
There's like 500 ounces of silver goes into one of those ballistic missiles. Somebody wants to keep the price down. That tells you the government wants to keep the price down. Yeah, and they tell people what to do. And, I mean, I look at the economy. How can the Dow go up 700 points in one day and finish up on the plus side? I mean, who goes in and buys up the stock? I mean,
plunge protection team.
Is it?
It exists.
But if you're watching the TV and you're watching all the business channels, nobody knows. I mean, there's a few insiders that know what's happening every single day. I mean, otherwise it's just BS that's being blown out.
Well, speaking of insiders, I mean, didn't Berkshire sell even more stocks recently?
Bank of America. I mean, how do they know that the stock's going down and they keep on pounding and pounding and pounding and selling the stuff off?
Yeah, we've got some information about them towards the end of the show.
Okay, wink, nudge. Okay. But anyway, I want to talk a little bit about silver and the value of buying gold and silver. I mean, you should have some gold and silver in your portfolio, whether it's 10, 15%, whether you have it physically, whether you take it home if it's a small amount, or whether you store it in a vault, or even if you put it in a bank deposit or a vault. There's only so much you can put in a safe deposit box. 100-ounce bar of silver weighs 7 pounds. You can't put 5,000 ounces in a safe deposit box. It takes up too much room. You need to vault it.
And also, you have to understand the difference between ownership and investment. I had a conversation with a client today who was thinking about selling the product and going into a gold-backed fund. And I explained to them that, yes, it's allocated, but not to you.
Yeah.
You can never access product that they own because you don't own it. And yes, there's serial numbers somewhere, but it's not like they're buying 1-ounce gold bars. They're buying 100-ounce, 200-ounce bars, 1,000-ounce bars of silver. This is not your product. And they charge fees. Yeah. There is a storage fee, but they couldn't. That was the thing. The client couldn't find it in the prospectus. Doesn't mean it doesn't exist. Yeah. And then I said, well, go talk to your broker. Who are you going to talk to? You don't get to talk to a representative of these funds. But at Guildhall, you do.
Yeah. Well, the thing is...
And it's allocated to you.
If we talk about physical product that goes in, whether you take it home or you put it in the vault at Brinks. Brinks is the safest way to do it. It's insured with Lloyd's of London. You can go visit your product. You can touch it. You can take the bar numbers down. That's a great way. There is a cost. There is a fee to store the product. People have to handle that product. It's a minimum fee, but it's insured. You take the product home and, somebody robs you, you're lucky if you're going to get $1,500 for $1 million worth of product in your home. They won't insure it.
It's nice to have some product at home if for cash purposes, if prepping wise, sure, there's nothing wrong with having some cash at home in case the lights go out and having some metal at the same time. But at a certain point, you're now storing wealth. You're not storing cash.
I like to get away from that because who's going to run to Max Milk and you got a 10-ounce bar of silver? Well, they're going to shave it off and weigh it and say, well, you've got 2 grams. It's not going to happen.
It's a test of the system at the extremes.
Happened 100, 200 years ago. It's not going to happen. But you need to have your product in a safe spot where you can go visit it and know that it's secure, allocated, segregated to you. But we offer at Guildhall registered accounts. We partner with Questrade. So, for example, if you order 5,000 ounces of silver today, it will be deposited from our account to Questrade's account in the product. The same way, if you wanted to sell it, we've had a couple of clients sell this week that needed funds or
liquidity for whatever reason.
3,000, 300,000, 600,000. The transactions were done in a day. The funds get to the client basically from Questrade within a couple of days. It's in your account. Not from us. We deposit. We send the funds as soon as a customer sells in their registered account. We're happy to send the funds to Questrade because we're always happy buyers at Guildhall. You know that.
Of course. If you want to acquire some physical gold and silver, you can do so by going to our e-store, guildhallpreciousmetals.com. It's up. It's working really well. I'm really, really enjoying it. And you can even set alerts of when you want to buy. So take a look at that, guildhallpreciousmetals.com. If you want to acquire physical gold or silver in a registered account, you use our other website, guildhallwealth.com, or you contact us at 1-877-8-SILVER. And coming up in the next segment, Paul, we're going to talk about an article, a video from George Gammon. He's predicting gold to go at least $1,000 higher within the next year. And the reasons are very interesting. So stick with us. It's The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 1-877-8-SILVER and the website guildhallwealth.com. And of course, we're only dealing in physical precious metals, physical gold, physical silver. If you want to acquire it directly, you can buy coins, you can buy bars, small bars, and large bars. If you're looking to hold it in registered accounts, we recommend things with bars that have serial numbers on it. Coins, you're paying too high a premium to have it in a registered account, in our opinion. But if you want it, we can do it. And it's a great way to maintain liquidity. Speaking of liquidity, I was listening to and watching a video from George Gammon. Now, for those who don't know, he's a great analyst in the market. He tends to look for correlations. He does a lot of these whiteboard videos, and he's always looking for correlations to sort of get a sense of trends. And he was talking about what pushes the price of gold. Well, okay, I'm going to listen to that one, right, Paul? And, he looked at the fundamentals, things like inflation hedge. That was a big one. Things like being negatively correlated to the dollar. And he kept looking at these charts between the 80s and 90s, and he wasn't quite finding those correlations. And I was getting very angry listening to it because I was thinking, but those are distortions. That was when people had trust in everything and everything was going well and there was plenty of liquidity in the banks, and the banks were still somewhat conservative based on where they were in the 70s and whatnot. But he got to a very important point, which is that the main driver of gold is actually the fact that it provides zero counterparty risk, that it's free from counterparty risk, and that it provides liquidity. So when he looked at all of his charts and all of the correlations, he basically surmised that the main reason banks, central banks are acquiring is because it's free from counterparty risk and there's liquidity. So I'm curious, Paul, on your thoughts on that. And in terms of the trends these days, would you agree that things are only going to get more volatile and risky, that people would want to remove themselves from that counterparty risk?
It's really, really simple. if
Okay.
you're printing money at a rapid pace, you can't print gold. Gold is going to hold its value. It's held its value for thousands of years. Back in Roman times, 15 pieces of silver or 16 pieces of silver against a piece of gold got you some robes and some sandals. And today, it's basically the same.
Tailor-made.
Tailor-made, and the same thing today. You can get a suit and a pair of shoes basically for the same price of an ounce of gold. I mean, it works. Gold is a value. It holds its value. When you hear interest rates are going to drop, there is no interest drawn on gold. You deposit the gold, you sit on it, it keeps on going up in value. I mean, I've been in the business since, I was trading gold at $250 an ounce, and we were trading silver at $3.80 an ounce. We've seen gold, we've seen silver go as high as $50, and it should be higher than $50. It shouldn't be at $31, $30. If gold is trading right now almost $2,600 US, what should silver be? $80, $90 an ounce.
Well,
so just let me,
yeah.
It's real money. It's gold and silver. It's an insurance policy. Gold is for your golden years. It's as simple as that. You buy it, you put it away. It's your insurance policy. It's going up an average of, 10% a year or 12% a year? It's up 26% this year. I mean, it's real money, and the central banks know that they're printing money, and they got to have an out. There's got to be an end game. So the out is buy gold, because it doesn't matter how much you print, because gold is going to keep on going up anyway.
Okay, so that kind of answers my question that I was going to ask, which is, George Gammon is predicting gold to go to $3,500 within the next 12 months. We've heard similar reports from, Bank of America, I think, was calling for 3,000. Central banks are buying it. Obviously, we've discussed that a lot on the show, providing liquidity as well as zero counterparty risk. Do you think that $3,500 within a year is a bold prediction? And do you think we're on track to see those price levels?
It's not out of line. I mean, it just takes a little bit of panic. Geopolitical things happen all the time. We can't control that, and banks can't control that, but stuff happens. And when it happens, it always goes to the safety haven, which is gold. And gold at, almost 20, as we're taping the show, it's almost $2,600 US. Right now it's, I lost my page.
What, the price of gold?
Yeah, price of gold.
Oh, we're getting close to 2,600
Well,
US.
it was 2,600. I'm just.
Oh, we broke 2,600.
Well, the spot price futures is over.
Oh,
that.
futures. Yeah, I saw that on. They were talking about it breaking 31
gold right
too.
now, spot ask is 25.8370 US.
It really took off once it kind of got back to that 25.50 like.
Well, I mean, I can easily see it get pushed within the next 2 months to $2,700.
Okay, so let's talk about some volatility. Again, nothing goes up in a straight line. This is something that was being discussed in the video as well. The main concern was basically that, we could have three scenarios. We could see a no landing where there's actually no recession. We could have a soft landing where, there's some sort of, I'm laughing because it's a joke, where I think we're already in a hard landing, but some sort of soft landing where it's all under control, or a hard landing where there's some sort of, as you mentioned, some sort of economic catastrophe that causes things to change rapidly. And obviously, we've seen in those moments in the past that, 2008, we always said gold and silver got thrown out with the bathwater. But they recovered very quickly. Could you see a scenario where, where history rhymes and there's a major pullback in gold and silver? Would you be looking to trade on that? Would you be recommending people trade on that? How would you view a hard landing and a pullback in the metals?
I don't think gold is going to pull back. It may be in a range of $100. It may go down to $2,400, $2,350, something like that. There's more upside than there is downside. You need to really, just look at it. I mean, it's interest rates. we were talking in the first segment, if it's on the 17th of this month, the Fed is going to decide whether they're going to drop a quarter or a half. The stock market, they want a half. It's already built in. I mean, everything is a little bit out of whack because everyone's waiting for the election in November in the US, and that will change a lot of things. It can go either way. I just think you need to be smart. You can't keep on reading stuff and watching TV and listening to the BS that they spew out. You've got to look to your pocketbook. Is it costing you more when you go grocery shopping? The cost of gasoline is down. Look at the oil reserves that they released. All that oil, millions of barrels of oil they took out of their, what's it called, reserve?
Yeah.
Strategic reserve. They haven't put back hardly anything at these low prices.
Yeah.
They haven't even I'm not even smart enough to buy back enough oil took out like 100 million barrels or something to keep the price down. Yeah, the price is low, but
that's just an example.
But when you look at, when they take, for example, they don't take the price of food and they don't take the price of housing or homes into consideration when they come up and say, well, we're only at 2.7, 2.3, 2.5. They're BS figures. Every month they change the figures for unemployment. I mean, I can balance my book at the end of the month. I know, if I've made money or lost money. I know how much product I've sold. I know how much what I've got in inventory. You tell me the government can't do that? They're computerized everywhere. And they make the figures up.
And they've got more people working for them than ever before. So why can't they get them to focus?
But they never get it right. So when you look at recession, I think we've probably been in a recession for 18 months. I mean, that's what we're doing. I mean, we get by. People get by. You go into a restaurant. I mean, I went out with my daughter and her boyfriend last night for dinner. The price was outrageous at the keg. Prices were outrageous.
Love the keg.
You love the keg. Well,
who doesn't love the keg?
They haven't changed the decor in 50 years. They're still brown.
Those are the best ones.
Brown.
Those are the best ones. The ones that haven't changed. I love those even better. Look, I think that, for me, I think it's a question of opportunity cost. There could be a stage where price of gold and silver pull back hard, and not talking day to day. I'm talking where you do get some sort of washout in the market momentarily. I think the question becomes, how are you supposed to trade on that in the physical market? Right? It's not the point. The point is that you're holding it for the long term. You're holding it through that move in the market. And as we saw in 2008, the price of silver, for instance, went from $19, $20 down to, it hit a bottom of about just under $9. That's when premiums went through the roof. You couldn't buy it for less than 12. It settled in around 14 and then moved back up quickly. Within a couple of years, we were trading at $48 an ounce. Now, interestingly, let's look at some of you mentioned before, the ratio gold to silver. At $3,500 an ounce, if the ratio did not narrow, we stayed at an 80-to-1 ratio, give or take, it would put silver at $43 an ounce. So if we were to see the price of gold move up effectively $900 from here in the next 365 days, and let's not forget that gold started the year at 2,000. We were starting the year, it was crickets. We were like, what's happening? Gold's at 2,000 and no one seems to notice. And bang, we're at 2,500 in a few months. So I do think it's possible. And if it is possible, then silver could be trading above $40 an ounce inside of a year. And then you have to wonder, as we're talking about earlier, you said, well, they're trying to keep the price down. But if you open the dam, there is potential here that silver could get, if the ratio came down to 50-to-1, you'd be looking at $70 silver. And at $70 silver, you start to have a mentality. You start to think about the psychology, thinking, well, it could easily be triple digits at that point. You're not thinking about that now, right? And I know that could be considered la talk, but we're already at over $31 inside of, we moved up like $3 inside of a week in 2 weeks.
What's going to cause a problem is scarcity.
Yeah.
As soon as it's a little scarce, getting a little harder to get the product, you got a herd mentality. I mean, we always said, we've been in this business a long time. We sold silver at $3.80. I sold more at $10 than I sold at $3.80. I sold more silver at $25 than I sold at $10, and I sold more silver at $40, to be honest, than I did when it was $25. And it's the same thing with gold. I mean, people are sitting on their hands. They're sitting on the fence. They've been getting 4.5% maybe on a GIC locked in for a year, where they're losing actually 5-6% because probably inflation is 10, 11, 12%. So they're losing money. Your money's being confiscated just by what's happening. I just think you need to hold gold and silver, whether you own it physically and put it into the vault or take it home, or if you don't have a TFSA, which is a tax-free savings account, you should get one because you can put, about $87,000?
Oh, I've got a story for you about the TFSA in a minute. Really good one.
Or a registered account. It's the same thing. We take the physical gold and silver, put it into the account. Questrade is the custodian. We do all the hard work of putting everything together, all the paperwork for you. We hold your hand through the whole process. It's very easy. And TFSA, it's a no-brainer. It's tax-free. Whatever you make, you're not going to have to pay a nickel to the government on. So wake up. Get off the fence. Gold and silver is going to go up. You
got to stop thinking about it. Yeah, the number 18778 silver, the website guildhallwealth.com. Coming up in the next segment, I want to shift gears a little bit. If you are worried about market crashes, a hard landing, and other markets that are facing challenges, want you to take a look at natural fancy colored diamonds. Paul recently acquired a new parcel. We want to talk about that and dive into the rarity of it and how it's going to secure a place and store value for a long term. So stick with us. It's the Real Money Show on 640 Toronto. Welcome back to the Real Money Show, the number 18778 silver, the website guildhallwealth.com. We're going to shift gears for just a moment, but before we do, I wanted to tell you a story about the TFSA.
Okay.
So I was talking to a client, and what they did is they got the CERB check for their business, right? Listen, they're not the only ones who did this. Everyone did this. We were on the show warning people, you're taking that check, you best invest it because you're gonna see inflation. We talked about it on the show. We said those CERB checks are guaranteed inflationary for this country. So we had a client that took their CERB checks, okay, and used it, put it into their RSPs, and they bought gold and silver. Yeah. And they're up, I think on their gold, they're up something like 60%. Right, gold was trading.
Did they pay the CERB back?
Yeah. Well, I think they got forgiven on a portion of it, right?
$20,000.
Yeah, so they got a portion of it forgiven.
But it was 40, and you got to give back 60.
Something like that. Yeah,
it was
the other way around. Yeah,
whatever.
So
I know I took it.
Yeah, so they got the
we tried to pay it back.
They got the deferral of the income.
Yeah.
Oh, sorry. Go ahead.
No, we took the CERB thing and we tried to pay it back, and you couldn't even pay it back. The TD who we deal with wasn't even set up to take it back, to make payments.
So you're just waiting for them to come after you. So
they were hoping people didn't pay it back.
I don't know. I don't know. Maybe it's like what they said about the Roman Empire, right? It's like entertainment and food and just distraction. Anyway, so they put it in. They're doing great. They're retired. So now they're saying, we're going to take it out now over time and put it into the TFSA, because you can do a
14,000 or something like that.
An in-kind withdraw from your registered. Anyway, I thought that was fantastic. I just thought, wow, look at what you're supposed to do, right? They did it right.
I have a question for you. What keeps most people up at night with finance?
I would say for the majority of Canadians right now, it's how am I going to cover the bills? I think even people who are doing quite well are probably surprised at how much things are mounting.
Well, people are not going out as much. I know for a fact I'm in an investment. Shall I talk about the tequila? No, I won't. But
you have an investment in a tequila company. It's fantastic tequila. Come to the office. You have a little taste.
High-end restaurants are doing okay because the wealthy, really ultra wealthy, are not missing out on anything. If they've got 2-3 homes, they're not missing anything.
And there's opportunities. Look, the
And
people
they're
who
making-
held gold are doing great.
Yeah, and
On the investment.
and the wealthy normally make money goes to money. It's the middle class and below the middle class. They're having a tough time. I mean, price of food is very expensive. I mean, there's more people, waiting at food banks than ever before.
And imagine if you elected to take a variable mortgage, you got hammered by the government pretending to fix inflation, raise interest rates, and a year and a half later, within 2 years, they're already saying, "Oh, we fought inflation, we're going to lower the rates." Meanwhile, look at what it did to your pocketbook, and who benefited? The banks, because they obviously needed that liquidity, and they knew. This is my own personal opinion. They knew they could take that liquidity off of the hands of those people who did the variable, right? And they wouldn't have a choice. They'd try to stay in their homes. And that they also knew that there was a time limit on how much they could do that. Now, that might sound conspiratorial, but we've had a lot of conspiracies come true in the real money show world. So I just think that they were trying to get liquidity. The banks got their liquidity, and it didn't help. They're still in trouble, and they still have liquidity issues, and they still have counterparty risk issues. And you wonder why the banks in the U.S. are saying, well, Basel III rules, gold's a tier 1 asset. You guys better start adding some gold to your portfolios. Yeah. Even JP Morgan's telling you to do that.
Yeah. Well, the same thing with, I was reading something on a great investor, I think his name's Rubenstein, and he's in gold, he's in Bitcoin, and he's in cash. Yeah. He's not trusting the stock market too much. A lot of the, smart money has been pulling out of the stock market. Their money is going into gold, and it's going into crypto. Whether we don't believe in crypto ourselves.
Well, I think so. I had a conversation, like a DM conversation in a chat group on Instagram. I said, look, gold, the U.S. dollar is a derivative of gold, right? That's where it derived its value from until they got rid of it. And Bitcoin is a derivative of the U.S. Why? Because in the absence of the U.S. dollar, you can, look at Russia. You can use Bitcoin in the place of U.S. dollars, right? And everything on the system, everything with Bitcoin is based on U.S. dollars. And people say, no, it's not. It's on its own. Well, actually, it's not, because I can measure how much a house should cost in gold based on gold itself, right? Based on gold itself and history, and say, here's how much the labor, the parts, the neighborhood, the whatever should cost in gold. In Bitcoin, it's, well, I think it's going to wherever. So there's a use for gold, for Bitcoin, in the sense of, well, if you get locked out of the US dollar, if they want to unbank you from the US, you've done something wrong, we get you off the SWIFT system. Okay, I'll use Bitcoin.
Well, it seems that Russia.
That sounds great.
Russia is doing that already.
Yeah, saying it's a derivative of the U.S. dollar doesn't mean it's a bad thing. That doesn't make it a bad thing. But it does make sense why they would want to stockpile it. Because if you have it all, you're forcing people who would like to use it to, now it's even more scarce, they can't use it, pushes the price up, and you're holding the stockpile. So,
All right, next segment, let's talk about some diamonds that I...
Yes, we got a little distracted there.
I bought a little parcel, and it's a great investment. It's not for everyone. If you've got spare cash and you're looking to keep the value of your money, and you're looking to pass that inheritance on to your family, there's nothing better than investment diamonds.
Yeah, it's different...
and also it's portable wealth. You can't move a home, take it with you if you need to go. It's, you still got to sell it, and it takes time. Diamonds are not liquid in the fact that there's a price on it every single day. It doesn't work that way, but it's a way to protect your wealth, protect it against, nobody knows that you've got it except you and the person that you bought it from.
Yeah, we'll get into it. There's lots of really, really good reasons to be looking at an alternative asset like a natural fancy colored diamond, and more importantly, why a natural fancy colored diamond is completely different than the white diamond market and the lab-grown diamond market, which we're going to get into in the next segment. In the meantime, if you want to get involved in the physical gold and silver market, you just got to look at this market. If you haven't done it, you need to look at it now, because it looks like it's only going to continue up from here. The fundamentals are at our back. We're not making this stuff up. There's tons of analysts in the market looking for the prices to move higher, and banks are calling for the prices to move higher. You've got to take a look. Give us a call at 1-877-8-SILVER. The website, guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 1-877-8-SILVER. The website, guildhallwealth.com. If you want to hold physical gold, physical silver in a registered account, fully allocated, fully segregated, free of counterparty risk, and liquid, you give us a call. You go to the website. Same thing, if you've never purchased precious metals before, it's time to get yourself insulated from all of the things that could happen in the economy. You just go to our website, guildhallpreciousmetals.com, and you can get started there. Paul, before we get into the diamonds, I just wanted to throw a couple things at you. David Morgan, longtime analyst in the silver market, pointed out this week that the silver market is worth $30 billion, and Berkshire Hathaway is now sitting on $277 billion. Just some food for thought there. Another food for thought, the U.S. has now spent $1 trillion this year servicing their $35 trillion debt. As we say, the debts don't matter, apparently, until they do. $1 trillion servicing, that's a problem. And also, we'll put this out on our X feed.
But does anybody even know what $1 trillion looks like?
It's crazy. Listen, also, Russia is now paying China traders in Hong Kong in couriered gold. They're bringing gold in, and they're paying them directly. Why? Because they don't have access to the SWIFT system. So just as they could use Bitcoin, as we mentioned in the last segment.
And China doesn't want gold.
No, they raised the limit on what they could bring in, and because it's in Hong Kong, which is a free port, that they're able to do it. Let's get into natural fancy colored diamonds. We're seeing, Paul, real market shifts right now. White diamond prices are down, likely affected by inflationary pressures, rise in lab-grown diamonds. When it comes to natural fancy colored diamonds, though, prices are not falling. In actual fact, they've been holding strong. What would you attribute to that?
It's a small market. Mines are closing. For example, the Argyle mine in Western Australia that produced 90% of the pinks in the world closed, which means by the mine closing, pinks are becoming rarer and rarer. So I bought a small package of a parcel of some pinks, some Argyle pinks, which I think will be an outstanding investment to get started with. The small ones, they're 0.54 fancy pink VS2. I've got a 0.30, a 0.48. They're great starter diamonds, which I think you should get into and hold.
What's the starting price range there?
Well, we can go as low as $25,000 into the $50,000-$60,000 range.
Yeah.
But it's a great stone. It will tell you if the Argyle mine is closed. The rarity is harder to get fine pink diamonds.
What's a diamond that's, let's say, a fancy or an intense pink that's over a carat with good clarity? I don't even know if the clarity doesn't even matter. What are they worth?
It's so hard to put a price. I mean, we own a tender diamond, 0.55 deep pink from 6-7 years ago. I wouldn't sell that, and it's 0.55, and it's a VS2, it's a P2 color. I mean, we wouldn't sell that for less than $600,000-$700,000 US.
So it's a market where small things can make big differences.
Well, the people that are smart and know the rarity and the beauty of such diamonds and get to appreciate it. I mean, it's the value. Who would pay millions and millions of dollars for an oil painting or a piece of art?
When they know. They know.
I mean, and this is passed down. It's inheritance. So, for me, owning gold, owning silver, owning investment diamonds, natural fancy colored diamonds, supports your portfolio. I mean, and later on, I'm going to come back on the show. As I said, I am invested in a tequila company, which we think is the best tequila in the world. And it's
winning a lot of prizes.
And, people come to my office and taste it and love it to death.
Because of the nature of the liquidity of natural fancy colored diamonds, or the lack thereof sometimes, it can contribute to the wealth preservation over time. True, right? Because you can't just get rid of it. You have to hold it. But it's the lack of liquidity is more of a feature, not a bug. Can you explain why liquidity makes natural fancy color diamonds a great place to store value in uncertain times?
Well, it's portable wealth. I mean, in the palm of your hand, you can literally hold millions and millions of dollars. And it's portable. It can be sold basically anywhere in the world, but it really doesn't matter to natural fancy color diamonds whether markets crash. Natural fancy color diamonds hold their own in really turbulent times. So my advice is have a natural fancy color diamond in your portfolio, have some gold, have some silver. If you don't have a TFSA, which is a tax-free savings account, call us, get into the market today.
And look, if you've missed a show, you can catch us on YouTube. You can catch us on Rumble. We post the show to X. We put a lot of information on X throughout the week. We want to thank everyone for joining us this week on The Real Money Show. The number, again, 18778-SILVER. The website, guildhallwealth.com. Thank you so much for joining us, and we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.